Good morning and welcome to our workshop for the beginning of this week, the first day of the week where we review the data and events for the week coming. Just a quick overview about what's happening in the markets at the moment. Moods have been a little deflated from Friday. We had some good data on non-farm payroll, that's US employment or unemployment, but there have been some bits of news that have sort of dampened the mood a little bit this morning. Mario Monti's decision, he's the technocratic leader of the Italian Parliament, who's decided to retire or resign a little bit early, thrown a little bit of uncertainty into the ring, which has caused Italian bond yields to jump 26 basis points. We've also had some news from China, where the data hasn't been so positive, which rather conflicts with recent news, suggesting that both exports and imports have slowed in November, which really, as the FT says here, has seems to run against the grain of other economic indicators that have certainly shown the Chinese economy strengthening over the last 4 to 6 weeks. Other news in Japan, they're technically in a recession again, unfortunately, and I've highlighted this here. It would be the fifth recession in Japan over the last 15 years, which is just extraordinary. The lost decade, as it's called, which clearly is more than a decade. Markets, as I said, are a little bit negative this morning. Equities under a little bit of pressure following the Italian news. It seems the mood or the trend continues in the euro, which certainly changed direction midweek last week, largely following, I think, comments from Mario Draghi, the chairman of the ECB, stating that there is a potential for a rate cut at the next meeting. Bearing in mind we've only had the last meeting last week, so there is some time to go there. That would be obviously in the new year. Let's just, without further ado, just have a look at the data coming out this week. It's a little bit sparse, actually, compared to last week. We've had the news, as I stated, about from China and Japan overnight. The first bit of data this week is not on Monday. We have to look to Tuesday, where we jump straight to the German ZEW economic sentiment, which comes out at 10 o'clock. That's showing further improvement from 15.7 to 11.4, so should be fairly positive. It is a potential market mover, so please be aware of that. We then have the trade balance in the States at 130, slight deterioration from the previous month. Unemployment data in the UK on Wednesday, expecting a slight, continued slight improvement, rise in the claims, but nothing too much there. Certainly not market moving anyway. Then the most important, one of the most important events of the week, we got the central bank, the FOMC's rate decision. That's the Federal Reserve, the central bank in the US. They announced their rate decision at 5:30, followed by a press conference. The press conference is going to probably be more relevant, where they'll probably comment on Operation Twist, which is likely to be retired, and on any ongoing quantitative easing measures there. Then we have on Thursday, we have the Swiss National Bank's interest rate decision. That's one of the second interest rate decision from a central bank this week. No change expected there. Then we have PPI, input prices in the States, an important precursor to CPI or inflation. Nice to see that negative 0.4%. Then we have retail sales, an important bit of data, an improvement from the previous month of negative 0.3%. We're looking for a figure of plus 0.4%. Then finally we have unemployment claims on Thursday, but that's what's used to collate the monthly non-farm payroll, so not so important just for now. Then on Friday we have US inflation data, the CPI data, which we're expecting to come in unchanged from the previous month. That's it for the week. Thanks very much for listening. We'll reconvene again on Thursday. Certainly looks like the risk on trade is just a little bit of profit-taking in that, especially in light of the Italian news. But as I said previously on our workshop this time last week, seasonally stocks, equities, they do quite well at this time of the year. So it'll be interesting to see how that trend develops, as we are quite toppy on a lot of equities and indices. Okay, thanks very much for listening. Bye for now.